What's up, my twinks with weird kinks and my bears with way too much hair? It's another Monday on Wall Street, and surprise, the stock market woke up hungover. But it decided to rally anyway. We call that a boot and rally, boys. The Dow's flat, like a girl with 2 CD cases in her back pockets. The S&P is up a hair, and the NASDAQ is strutting around like it just hit leg day for the first time. Now, why? Because the Fed cut rates last week. We already talked about this, and everyone's pretending this is a whole new bull market. You can't put lipstick on a pig and call it a supermodel. It's still a pig. It's like drinking a Diet Coke after downing a 12-pack. Sure, you feel better, but you're still going to wake up with the runs. So this week's main event is what I call the Fed karaoke tour. Stephen Miran, Trump's new Fed governor, is up first today. This guy's like the new kid at school giving his first book report. Everyone's watching to see if he bombs. Then Powell is going to take the mic on Tuesday, and you know his script by now. We cut rates, inflation's still sticky. Don't go buying that Lambo yet. The market wants fireworks. Powell's going to give us a damp sparkler at best. We also had gold hitting fresh highs. Gold just hit all-time highs at $37.50 an ounce. That's right, investors are hoarding shiny rocks again. Now, why are they doing this? Well, because the Fed's expected to cut rates twice more this year, which means people are dumping dollars for something that looks good in a pirate chest. Honestly, at this point, burying gold in your backyard might be less volatile than holding current growth tech stocks. Now, we are talking about volatility, right? Well, crypto's having a meltdown worse than Elon Musk after a bad tweet. Bitcoin's down 3%, Ethereum's down 6%, and Solana's down 7%. Dogecoin, yes, that joke coin people still trade, is also down 10%. If you're in the trendsetters room with printing tendies, then you did exactly what his name says. You printed, and I mean printed. Now, over 1.7 billion in bullish bets got wiped out in 24 hours. I also saw a thing where Binance was dumping crypto to squeeze out people. So, to squeeze out longs. Or I think it was like to basically liquidate their position. Liquidate, yeah. And that happened in 24 hours. That's not a market. That's a liquidation sale. Like I just said, 94% of those liquidations were bullish traders, by the way. Translation, people were betting on moonshots and ended up face first in the crater. You hate to see it. You hate to see it, brother. Now, don't worry, because Apple's here to save the day. Shares hit their highest level since December after Wedbush slapped a new price target of $310 on it. No, I'm not talking about your mom's Bush. I'm talking about Wedbush, the analyst firm. Not that you get it confused. By the way, tell her I say. Apparently, 315 million iPhones haven't been upgraded. Translation, Apple's business model is basically your phone battery sucks, so buy another one, you loser. And it works. The iPhone 17 is flying off the shelves for some reason, even though we just had Scratchgate. Somewhere Steve Jobs is smiling and Tim Cook is counting another billion. And of course, how could it be a complete Monday without our favorite orange-colored Dorito throwing a wrench into the economy? On Friday, Trump rolled out a $100,000 fee for H-1B visas. That's right. I think they were like $5,000 before or less. Who knows? But a 6-figure cover charge just to work in America? Yeah, okay. Microsoft and Goldman Sachs spent the weekend frantically emailing employees like, quick, get back in the country before the bouncer checks your papers. But then the White House clarified, as they always do, wait, it's only for new applicants, not renewals, and not annual. Like, what? Classic Trump, man. He makes a policy, sets the world on fire, then changes the rules mid-game like a Monopoly cheater. The result, tech stocks wobbled but didn't implode. Indian IT firms, though, they took it on the chin, they took it on the chin. It was not good. Meanwhile, though, our boy Elon stayed quiet, probably saving his rants for X, but he did manage to shake Trump's hand at a memorial service because nothing says policy stability like a handshake photo op at Charlie Kirk's memorial. Now, we also have Uno's not the only thing that shuffles cards. So does corporate. Oracle is back in the headlines again, not for AI, but for replacing CEO Safra Catz with not one, but two co-CEOs, because apparently Larry Ellison looked at chaos in Washington and thought, hey, why don't we copy that model? Investors were not impressed. Shares, well, they dipped and then they popped when analysts realized Oracle still gets to store TikTok's US data. Bottom line, Oracle's business strategy is basically be the mall cop for TikTok. Now, looking ahead, we have Costco reporting this week. This is going to show if Americans are still hoarding paper towels by the truckload. We also have MU. Now, mind you, if we are still hoarding paper towels by the truckload, we're fine. If not, that is a recession red flag. With Micron, they're on deck. They're the litmus test for AI demand. If their numbers miss, this AI boom might look a lot like the .com bust, but with better graphics at least. You can see it all in 4K. The disappointment on your face when you blow that account finally. So where are we now? Well, the Dow's flatter than your girlfriend. The S&P and NASDAQ are slightly higher, like that guy you just gave $5 to who said he's going to use it for food. And gold at a record high. Crypto's bleeding out like it's a cow that just got sliced in the stomach. Apple is flexing while Tim Cook is counting his billions and Scratchgate is going crazy. Oracle, well, they're pretty much playing like college football team. Well, actually, they're playing like the Atlanta Falcons last night, straight up fumbling. And Trump, well, they reminded CEOs that immigration policy is basically an improv routine. Investors are holding their breath for Powell tomorrow and core PCE Friday, the Fed's big inflation print. That number decides whether we get another cut in October or another round of market indigestion. So prepare for either Pepto-Bismol or cocaine or both. If you really want to party, who knows? But here's the takeaway. The market's drunk on rate cuts. Gold bugs are partying, crypto bros are crying, Apple fanboys are upgrading, and Trump's charging tech firms $100,000 for the privilege of hiring talent. America. Volatility isn't coming, folks. It has arrived. Yeah, it's here, and it's here to stay probably. And the only thing more unstable than the market this week is the policy message coming out of the White House. Buckle up. This week's ride, no seatbelts here. Thanks for tuning in. This is Max Pitts with Trades and Gains and Investor Central Club. Hit that like, abuse that subscribe button, and please leave a funny comment because I need some stuff to laugh at. Have a great day, everybody.